Hello and welcome to my next War and Markets review. First of all, thank you for the overwhelming response in terms of the audio quality. And almost all of you have said that the audio quality is fine. A couple of people mentioned that I should raise it to an eye level, and so I've done that today. I hope it's fine now. So the market today again is displaying very similar tendencies with slight differences. So like for the last few days, the Nifty has been flattish. Today was even more flat in just 0.02%, but the mid, small and micro cap indices all showed a very strong performance. And keeping in tune with the same trend, the advance decline ratio was heavily in favor of advances. More than 2,000 stocks rose today and about 900 stocks only fell down. So clearly that tells you that retail participation was very broad-based and buying. I will come to the FIDI flows in a bit, but what caused this bounce was basically some good news on the war front in terms of the US sending across a one-page proposal on which they were expecting. And even yesterday, if you recollect, there was talk about this kind of an agreement to end the war. Now, so the markets priced that in and rose sharply. Middle of the day, in fact, the Nifty displayed a very peculiar feature. It ended flat, but it began low and spiked towards the middle of the day and then again eased off. So clearly, there was the good news when it came out at that time, it was there. And the oil price, which is the direct geopolitical measure, I would say, actually went down to $96. And remember, we are talking about $114 just a couple of days ago and $126 about a week ago. So it's a sharp correction happened in the price of oil, which naturally gave a huge boost to buying. So one would then think that FIs would also have repriced their India risk and would have come in with a lot of money compared to their behavior of yesterday, where they redeemed a lot, which, as I said, was not very explainable because the news was positive in yesterday. Well, today, what happened was they reduced their selling to just about 300 crores. So they didn't turn net buyers, but they reduced their selling. So that can be viewed as a positive that they also took this geopolitical, risk premium going down and bought some things in the market today, but they didn't turn net buyers. So that way, there's a reason for that too, right? After 12 o'clock, like I told you, the Nifty collapsed and came back to a flat level by the end of the day because, as usual with these matters, Iran gave a very cold response saying this is more like a wish list rather than a formal proposal, and we refuse to be browbeaten by threats and this kind of stuff. So it doesn't look like they are jumping at the proposal. And then, as usual, Mr. Trump stepped in with saying that we've given a proposal, but I'm not very confident that they're going to accept it. But if they don't accept it, I'm ready to bomb. So typical Trumpisms are at play. So it take away all of the good in that. Probably the FIs, I can't judge the intraday behavior, but probably they were buying a little bit towards the middle of the day and then they decided to sell because again the news was turning negative. So the oil, which went down to 96, went back up and currently it's trading around 100. I see that the GIFT Nifty and the US markets are also trading red. So probably now they realize that this whole letter is not really going to lead to a solution for the war. And so let's wait for news overnight and then see how it happens. But as things stand, it's going to be a volatile day tomorrow also. Now coming down to the FIS and DI flows, I told you FIS brought down their selling from about 5,000 crores yesterday to hardly 300 crores. But surprisingly, the DIs also reduced their purchases from almost 7,000 crores yesterday to just 400 crores. Now, very puzzling behavior, right? If there is good news on the war front, we thought the DIs would also be stepping in and buying a lot. Not true. So what is it? Can we try to explain this behavior? Well, what I'm able to understand from this, and if I look at the kind of sectors which have done well versus done badly today. So what did very well was defense and auto and to some extent realty. So this is clearly something that retail and HNIs have been fascinated by ever since the war started. They've been fascinated by defense. So I would suspect that's retail buying. And an auto and this, I think the numbers have been really decent and probably DIs and sub both buying there. But while they book profits, right, was in terms of PSU banks, FMCG, consumer discretionary. So all of these places were the ones which corrected a little bit today. So this DII behavior of 400 crores only buying, when yesterday they bought 7,000 crores, takes two different meanings or interpretations in my opinion, right? So first is that they bought yesterday because when the FIs sell some specific large and larger mid caps, those prices come down and they feel that there's a value in it and they go and pick it up. But since FIs were not selling today, they did not find any good price behavior in their favor. So they said, so why should we also buy? So that's point number one. Point number two is that as the earnings season is progressing, they still need to generate cash to buy the sectors and stocks which are going to report good earnings in the coming weeks. So I think they did some profit booking today, and that's why this sector rotation happened. They're moving money out of public sector banks, out of the FMCG pack, out of consumer durables into, let's say, some amount of defense, maybe some amount of realty, some amount of rate sensitive. But clearly, and IT was again a negative performer today. That's been the case for quite some time now, given what we have discussed it in greater detail. So I think that DIS, it was sector rotation, raising cash to continue to keep buying during the earnings season. And like I said, since the FIs were not selling, they didn't feel the need to step in, or they didn't get any big value buys to put in more cash. So that's the summary of today. A very interesting day, as you can see. And from that point of view, for tomorrow now, the look is that, like I said, it looks like, again, it was slightly a false dawn in terms of a promise of a closure to the geopolitical crisis. And by the way, another thing to say, we've been just focusing on Iran and US, the Hormuz Strait and all of it, because 1,600 ships are still blocked at the Hormuz Strait. The strait has not opened, and America's blockade is continuing. So there's actually no real change in the ground situation there. But apart from that, Israel today attacked Beirut after a month or so, right? And so from that point of view, that part of the war is not going away in a hurry. So I think that's the reality. And I think FIs will continue to remain cautious about India, because even at $100, from their perspective, right, the fiscal implications for India, the inflation implications for India, what EPS growth, I don't think FIs are still very comfortable. But for DIS, they don't have a choice. For retail investors, like I said, they feel that compared to just pre-war, during the March month, the kind of correction that took place in their portfolio, they feel that it's ideal time to step in and average it. I mean, this is what I've been telling every day. So that's the behavior which is continuing. And the FIS selling is not affecting the lower end of the market too much. So if you see 1 month, again, I said this yesterday, small cap and micro cap indices are up 18%. 1 month from today was mid-April to mid-May, right? So clearly post-war, small cap has shown the sharpest recovery, mid-cap is 13%, and the large cap index Nifty is only about 5% up. So clearly we are in a phase where FIs are going to continue to remain cautious till there is really a solution to the war. There will be domestic retailers and HNIs will react when the war price premium comes down. They will buy a little more, like it happened today, and they have generally been averaging their portfolio. So they don't expect this stance to change in the coming days. So we're going to continue to see a mid and small cap and micro cap outperformance compared to the large cap, because even if the FIs start coming back slowly, I expect the DIS to sell those to them to book profits and redeploy into a domestic facing sectors, which is, I think, more of the need of the current view of the market. The earnings season, like I said, is progressing. Maybe in a couple of weeks from now, we'll have some degree of clarity, and I will put out a video around that at that time. But right now, it looks like the earnings season is mixed, but not as disappointing as that. And that's one of the reasons that the DIs have generally been stepped up buying, except for today. So I think tomorrow, again, if the FIs step up the selling, DIs will step up the buying. That's been the pattern. And continuing our methodology of staggered purchases in the proportion of your portfolio as it was before the war, I think is the right strategy, and keep sticking to the same. All the best and look forward to tomorrow.